Hi, I wanted to explain a concept in stock markets or cryptocurrency where if you have a trading pair of A and B and one support or resistance level keeps getting retested, then the more often a level is retested, the more likely it is to break. Now let me explain why. When there's a trend, people notice the trend. Humans are good at finding patterns, and that changes everyone's expectations, and that changes everyone's behavior. So I could just go through different mindsets of traders, but basically, when you have a graph, which way is the camera? Is this left or right? This is left. Oh. Okay, so I start from here. If this is A versus B, and say, if the price goes up, that's good for A, and if the price goes down, that's good for B. So I'm talking about a ratio. This graph is a ratio. So we're talking about resistance. So if the price stops going up, that's resistance for A and support for B. It's a trading pair. So if you flip the graph upside down, it's B versus A. All right. So if the graph goes like sharply down and then sharply down and then there's a reversal and it starts going down again, it's more likely that it breaks through that level of support for A's minimum price than it is if it just went sharply down once. So that's like an M. On the other hand, you can have a W. So if A is decreasing in price and then it reverses and hits the, say, the Fibonacci retracement level of resistance, and then it gets deflected off of that, and then it hits that level of resistance again, it's more likely to break that resistance than if it was the first time. And if it hits a third time, then it's even more likely to break that resistance, because before the trend was going down, and now the trend is oscillating. So the average, the moving average, instead of the moving average going down, moving average is here. So people, so this moving average establishes new levels of support, right? Before, the resistance was high because the trend was down. So the downwards pressure, the momentum was down. But now with the oscillations, the momentum is sideways, and so it's people feel more confident with buying into a price increase than they were when the trend was down. And on the flip side, if you flip it B versus A, then if B goes up, right, people were confident buying B, but now that it's testing this lower level of B, then people are less confident buying B. So they might opt for A the next time B goes down, you know? And so there's these different mindsets for traders. So when you have a trading pair of A versus B, or the dollar versus the other dollar, or the crypto versus the other crypto, or the crypto versus the dollar, when you have these trading pairs, stock versus the dollar, you can predict the more times something. Now the important thing is retested. I said retested. The more a level is retested, the more likely it is to break. Well, what if you just have a V, right? If you have a price going down and then up, do you think it's going to break through that bottom layer unless there's a reversal? No. If it keeps going up, it might keep going up. But if there's a reversal, if once there's the reversal, you can say, oh, it might retest that bottom layer again, right? If the price is going up and down and up and down, if it goes up, test, like as soon as there's that reversal, you know it might test a lower level, right? So test, oscillating, reversal, test, going up. You don't know it's going to test that level again, but as soon as there's a reversal, as soon as there's that peak of the curve, as soon as the curve reverses, as soon as the price direction reverses back down, then you know there might be another test, right? So it's the reversal you wait for. So that third reversal is often very important. Also, if there is a double bottom or a double top, you look for a wedge. So let's say there's a bottom, but then the retest, it's a higher bottom, and then the retest, it's a higher bottom. You can say that the momentum is upward. But if there's a test, and then a lower test, and a lower test, and lower, 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 you can say the momentum's downward. Likewise, if you're testing high, if there's a high test, and then a higher test, and then a higher test, they're making new record highs, then you can say momentum's up. And if there's a high test, and it tests and not as strong, and tests not as strong, and tests not as strong, you can say the momentum's down, right? But if it's testing the same level every time, you can say it's eventually going to break through, because now instead of an upward trend, people are following the sideways trend, so they're more confident pushing that price up and hoping they can sell at a higher price.